This will be you. After learning this Bollinger Bands strategy that I will be teaching you in this video, it's so amazing to see how profitable this indicator gem can be if traded properly. And today, I will be revealing the best way to trade the Bollinger Bands indicator for big profits. You know how we do it here. Click the like button and subscribe to our channel if you are new here. Now, let's get down to business. Bollinger Bands are one of the most popular trading indicators in the market, used for analyzing technical statistics and price data in order to get the real direction of the market. And just as the name, Bollinger Bands refers to the bands or price channels placed on the chart to represent a range of market volatility. The Bollinger Bands consists of a set of 3 bands which are drawn in relation to the market price movements. We have the 20-period simple moving average in the middle, which you can see in blue color, and an upper and lower band of standard deviation, which are in green and red color respectively. In order to place them on your chart on TradingView, go to the Indicator tab and type in Bollinger Bands, and it will give you this on your chart. Bollinger Bands uses a statistical measure, which is known as the standard deviation, used in order to establish the areas where a band of support or a resistance level might lie. This concept is also known as a volatility channel. The volatility channel plots lines above and below the 20-period moving average, and these lines, also known as envelopes or bands, will always widen or contract according to how volatile or non-volatile the market is moving during that period. The Bollinger Bands serves to provide different aspects of price measurement and to identify very useful information on the chart, including trend continuation or reversal, periods of market consolidation, period of upcoming large volatility breakouts, or possible market tops or bottoms, and potential price targets. Bollinger Bands are a trend indicator which detects the volatility and dynamics of the price on the market. Bollinger Bands contract when the market volatility is low and expands when market volatility increases. During market periods of low volatility, the bands are narrow, while during the periods of high volatility, Bollinger Bands tend to expand drastically. The upper band shows a level that is statistically high or expensive, and the lower band shows a level that is statistically low or cheap. The Bollinger Band width correlates to the volatility of the market. For a technical point of view, trading near the outer bands provides an element of confidence that there is resistance at the upper boundary, or showing you the support level at the bottom boundary. Though this concept alone does not provide relevant buy or sell signals. All that it determines is whether the prices are high or low on a relative basis. When market approaches the upper bands, we call it overbought, meaning that the price is prone to fall from that spot. And when the market price touches the lower band, we term it as oversold. Prices can pump up from this spot, meaning traders should be on the lookout. As we use the Bollinger Band, it is only the price movements when it touches these lines that we pay attention to. We pay less attention to everything else apart from that. You will know why when I start showing you how we trade the Bollinger Bands as a strategy. Now you may want to ask, how did I get my Bollinger Bands to be exactly like this? The truth is, there is a default settings for the Bollinger Bands when you apply it on your chart. It usually comes with a 20-period simple moving average and a standard deviation of 2. It's not a must that you will use these default calculation, and the Bollinger Bands can be stretched at will. But hey, here is the problem. If you reduce the variations too much, the Bollinger Bands will become very tight and will start to provide a lot of signals. And many of these signals will be false signals and filled with a lot of market noise. And if you increase these variations, the Bollinger Bands will become too wide and the market prices will find it very hard to even touch the lines to give you good signals. It is best you stick with these default settings, as lower settings can bring more losses and higher settings can make you miss a lot of good signals in the market. But if you stick to the middle of the road, it will generate for you more signals and more profits. How to trade Bollinger Bands? There are two main ways we trade Bollinger Bands. First, we can trade it as a trend continuation indicator, and secondly, as a reversal trading strategy. I will show you how you can trade Bollinger Bands with trend, but first, here are the groundworks in order to trade this indicator with the trend. In order to trade this indicator correctly with the trend, you need to first off understand the current trend of the market in which you are currently trading with, and that's why I love the Bollinger Bands indicator. It has literally all you need to trade the market comfortably. In order to identify the current trend of the market, we will be paying attention to what is happening around the middle 20 period simple moving average. We need to understand how price is reacting around it. Now, see that when the market is moving in an uptrend, the prices are moving above the 20 period simple moving average, and when the price is trending down in a downtrend, the market prices will begin to move below the 20 period simple moving average. So knowing this, we are only buying with the Bollinger Bands when the price is moving in an uptrend above the moving average, and we're only looking to sell the market when the price is moving below the moving average. That is our first rule. And secondly, we are only ready to click the buy or sell button when the market touches the overbought and oversold deviation lines. So we can only sell when the market touches the red deviation line, and we can only look to buy the market when the price touches the green deviation line. Now, I will show you some few examples of this as we open up our minds and grow into the next strategy. In order to trade with the trend, we will apply some measures to it. So in this chart right now, see that we are in an uptrend here. And how do we know that? Because the prices are moving above the moving average line. And since we have that already, the next thing we should be looking out for is where we can place our trade entries. And to do that, we will be using the green deviation line. Anytime that price touches the deviation lines, it signifies the market is either overbought or oversold. And in this case, as price touches the oversold region, which is the green deviation line, we are going to be taking that as our signal for us to enter the trade. And on the chart here, you can see that the price has touched the oversold region, which is our entry to buy. So take our trade from there, applying our risk management by placing the stop loss a few pips below the moving average line, and our take profits to the next high or more, depending on your risk appetite. And here, we have the take profit target hit successfully. Now, let's take a look at another example. On this chart, we can see that the market is moving below the moving average line, and based on that information, we are looking to follow the trend by selling the market. We want the market to touch the red deviation line, which is signaling our oversold region. And from there, we will take our trade from it as it touches the red deviation line and place our stop loss some few pips above the red deviation line and our take profits target at the next low, or according to your personal greed. And again, you can see that the take profit target has been hit successfully, and that's how easy it is using the Bollinger Band to get in for trend continuation. Now let's look at how we can use the Bollinger Bands to trade range markets. To trade with the range, you will see the Bollinger Bands deviation lines contracting with the 20 period moving average. Allow the prices to form to consecutive lows and highs like this one, and then you wait for price to return to one of the lines and at some time touching the deviation line. Then you sell the market from there. Now, let's see another example. Just like I said earlier, when we trade the range with Bollinger Bands, we are first looking for the two highs and to lows. Very important, calls that will guide us to find the next strategic point. And when you look into this chart, you can see that we have to highs here and to lows. Then we're taking our next entry when the price returns to one of the line and touching the deviation line at some time, just like we have here. the price touching the red line, and the resistance line at the same time, giving us a great selling signal. Bollinger Band is a strong indicator for day trading and scalping, but they will work better when traded with strong entry candlesticks in order to give more assurance to your trades. And in this video, I revealed the strongest candlesticks that works for trading entries, great for any trader that desire to make more profits in the market. And if you want to become my student for personal training and mentorship, check the link in the description box below. We are the Trading Tribe, and it's a wrap for this video. See you in the next one.